Welcome back here with us on Times Now. Viewers, stock market investors in India lost over 9 lakh crore rupees in just one day. That is Friday, the last day of February. It was the worst day for the markets in around 5 months, largely due to global economic worries, foreign investors pulling out their money and lower than expected quarterly results of some of the listed companies. Both Sensex as well as Nifty fell around 2%. In fact, for Nifty, it was the longest losing streak in 29 years. So the question is, what should you, the investor, do in such a scenario? For more on this, let's go across to my guests who are joining us live. Ajay Bagga, who is a very well-known market expert. Ashish Wakankar, who is founder and chief investment officer of Equipoise Capital Management Private Limited. Good evening to both of you. Thank you for joining us here on Times Now. Mr. Ajay Bagga, to you first. People are losing money almost on a daily basis. I want to ask you, what should the investors do in the current scenario?
Depends on what type of investor are you. If you are 100% in equity invested over the last 1 year, then take some money off the table. If you are an investor who has invested over the last 5 years, no problem. You are sitting on good profits. Look at your asset allocation afresh. Overall, I would say still not the time to go all in. We will probably see a bounce next week because the markets are at extremely oversold levels. But the complexion of the market is still sell at every rise. There are sellers sitting at every rise. So it will be a very painful climbing up the stairs while you have just slid down the banisters when the market has fallen. You have come down fast, but going back up will be clawing up the staircase with sellers kicking the buyers in the face at every step. So it will be a very hard-fought battle, but eventually the economy is turning. The numbers that came on Friday are showing that there is a turnaround coming. Right. CapEx, if you see year on year, December CapEx went up 95%. January CapEx by the government went up 51%. So there is a huge catch-up happening. If you look at the fiscal deficit as of end September, right, it was about 33% less than what should have been spent. Now we have gone to 9% less. So the government spending is catching up. And the four things troubling the economy: corporate earnings, that I think has bottomed with this cycle. December quarter, the bottom has been hit. And now there is a base effect coming, which will see earnings grow. Second is the economy slowdown, which again from 5.4 you moved to 6.2 and it's going to go up. Right. Third is RBI's very strict tight policy, which we saw the rate cut happen at the last policy. Okay. We are expecting 3 more rate cuts. And fourth was liquidity being very tight, which again RBI is taking macroprudential measures where we are expecting credit to grow very fast now. Again, double-digit growth in credit coming. Liquidity, RBI has been taking measures. Okay. Yeah.
So domestic factors clearly are looking better. But what do we do about the geopolitical situation that we're also facing? Foreign investors pulling money out of Indian stock market. So Mr. Ashish Wakankar, what is your view? Is this pain temporary? Should the investors stay invested, or is it time to start pulling out money slowly from the markets?
Good evening to all your viewers. See, this is not the first time that you've seen markets correct or foreign funds selling. You've seen the even sharper fall in the year during the global financial crisis in 2007, and the markets corrected something like 60%. So you had a fall in December 2007 to October 2008. That was a fall of around 60%. Look at where the market has gone since then. Then you had the COVID crisis. During that, the markets fell nearly around 37%, 36, 37%, whatever. That time, the index was something like 7,610. Today, we are at 22,000. So we've seen a peak of 26,000. So this current fall that you've seen is around 16% from a peak of 26,000 or to around 22,000. So it's not that foreign funds have not sold in the market, markets have not corrected. We've lived through all sorts of crises, we've lived through all sorts of geopolitical situations and come out strong. What is more important, the data point that one should be, if one calls himself or herself an investor, then one should be fixated on the goals for which the money was invested. Secondly, take a look at where the economy is. Ajay just mentioned that we are doing well. He spoke also about the fiscal deficit. He spoke about the capital expenditure going up. All things are firing well now. We had a lull because of elections. So things are coming in line.
Okay.
My question over here is, in the past, have we seen such kind of selling? This is unprecedented kind of selling that you've seen in the Indian market since October of 2024.
Okay.
To date, we've seen 2,25,000 crore worth of selling from foreign institutional investors for whatever reasons. They would be taking profits because Indian markets had gone up significantly. They had made reasonable profits in India. So natural for them to take the money out, nothing out of the wrong,
But we need to keep a close eye now on, how markets will open, of course, on Monday because of what has happened in the Oval Office last night. Thank you very much, Mr. Ajay Bagga and Ashish Bakankar. Appreciate both of you for joining us and sharing with us your perspective. We'll slip into a very, very short break. More news and updates on the other side.